Hello, everyone. Given what's been going on in investment markets in recent days and weeks, I'd like to give you a bit of an update on strategy first thinking and how most of your portfolios are performing. Hopefully, this will be an easier way of reaching out to you en masse. But obviously, if you do have any questions or if I haven't reached out to you directly, please feel free to give me a call or send me an email, and I will happily talk you through any points that are relevant to your situation. So as most of you are probably aware, the stock market has fallen quite drastically in the last few days. It's wiped out much of the profit we've seen so far this year. In fact, I think it may have gone a little bit further than that now. But this hasn't actually come as a surprise to us at Strategy First. And hopefully it hasn't come as a surprise to you either. For the last 12 months, 18 months, 2 years, we've kind of been talking about the idea that an event like this was going to occur at some point. We didn't know exactly when, could never have predicted it, but it's happening now, and it hasn't come as a surprise. And there's a couple of things I'd like to talk to you about, particularly around how we're going to act as a result of that. The first thing is not to panic. I know the media is probably screaming doom and gloom at you right now, but you have to do your best to ignore that, because although share markets are falling, as long-term investors, that doesn't really impact you. For those of you that are drawing down pension payments, things like that from your portfolios, we've structured those portfolios to have a big chunk of money in safe, secure, liquid assets that you can draw on and fund your lifestyle for a number of years without needing to break a sweat over share markets. For those of you that are accumulating, so contributing to your portfolios, this is actually a fantastic buying opportunity. And the contributions that you make will continue to drip feed into markets at more and more attractive prices as the market falls, which will hopefully give you the benefit of the eventual upside when it comes. Some of you would like to, I suppose, be quite aggressive and see this market downturn as an opportunity to buy, and that is a very good mindset to have. The only word of caution I'll give there is we need to be very careful in situations like this not to jump back in too eagerly or too early, because we don't know what markets are going to do yet. They could plummet considerably further. From here, they could rebound right back up to where they were, in which case we haven't lost anything. So we'll still be taking almost the slow and steady approach to reinvesting, although if markets do fall further, we'll quite likely look to adjust your portfolios to take advantage of that in the long term. But it will be a slow re-entry into the market rather than piling back in. So the summary I'm looking to give you here is that despite all the noise you're probably hearing, despite what's going on, there really isn't a need to panic. Your portfolios are structured quite well to deal with the current market environment and what the future holds. But if you do have any questions, as I said, please do let me know. The second thing I wanted to touch on today is a couple of points around the Strategy First Investment Charter. So this is a collection of our philosophies around investing. The ideas in it shouldn't be new to any of you, but we've never really formalized it into a charter document before, and that's something that we'll be sending around in the coming weeks. So what I'm going to do in this video and in a series of future videos is just introduce you to some of the points and explain how they relate to investing, to our philosophies, and to markets in general. And there's two that I think are quite relevant today. The first is always take the long view. So you will have heard me saying many, many times that we invest for the long term, not the short term. And as a result, you can afford to not ignore, but certainly distance yourself from what's going on in markets in the short term and try to not react emotionally. And if you can do that and successfully focus on the long term, you end up with a much, much better investment result. The second point is let markets work for you. Markets go up and down, and we can't control that. We don't try and take credit when markets go up, and we certainly don't take blame when markets go down. But it is about harnessing the long-term power of those investment markets. So not panicking, staying the course, staying invested, buying back in if and when appropriate. Those sort of actions will allow markets to work for you and to give you a much better outcome over the long term to help you achieve those objectives. That's it for now, guys. But as I mentioned, please do feel free to contact me if you've got any questions, and I'll do my best to answer them. Thank you.